I'm going to show you everything you need to know about using time frames in your trading. You're probably someone who has seen different time frames listed on tradingview.com or on your trading platform, or you've seen some traders use these time frames while other traders are using different time frames, and you're wondering, how do I actually use time frames? Which ones do I actually use? And how do I use them to make money? And time frames are extremely important. The ones that you look at are extremely important, and it really could be the difference between you making money on a trade and you losing money on a trade. So don't worry, we're going to break down literally everything you need to know, including what time frames you should be using depending on what style of trading you are doing. Before we actually hop into the education, wanted to show you where I'm doing the video. So we are in my Florida balcony. It's a little bit messy, a little bit dirty, but beautiful Florida weather. This is why I moved here in the first place. I moved here about 4 months ago or so you could even see the waves, which is absolutely beautiful. We got a lot of boats out, a lot of police boats, which is kind of interesting. But yeah, and I actually trade in this room right here. So this is the trading room. I know it's super bland. Like I said, I recently moved, so still have to kind of decorate this room. Of course, I got a dirty paper plate here, so yeah, you're gonna have to, ignore the messiness, or try to, but huge monitor, absolutely need this monitor, need this setup. But yeah, I might do another video later kind of showing you what my equipment is and how I trade and what's going on with that. By the way, also let me know in the comments if you're a fan of this vlog style of content. I know most YouTubers, especially in the trading niche, if they're not doing like a day in the life video, they're just stationary in front of a camera talking. There's a lot of edits, crazy edits and stuff like that. I kind of want to make it way more authentic, way more natural, so you could actually kind of see what my life is really like. I think so many people on YouTube, Instagram, TikTok, they try to show off this glamorous life of being a trader, and most of the time it's completely inauthentic. I wanted to really make authentic content for you guys, show you what life is actually like as a trader, what we do every single day as traders, and explain to you, knowledge and education without gatekeeping anything. So let me know if you're a fan of this vlog style of content. And I'm making, like I said, making way more videos for you guys. So let me know in the comments what videos you want to see, whether you're a fan, what you want me to change, whether you want more music, whatever the case is. I want to make content that's authentic and that you guys love. So yeah, make sure you subscribe and let me know what other content you want to see. Let's start with the education. Let's talk about using time frames in your trading. And the first thing that I need you to understand is that we have these candlesticks on the chart, and these candlesticks represent price action. It represents what is happening with price. Where is price opening? Where is price closing? What are the highs and lows of price during a particular time frame? And we get to select that time frame. So for example, you could see we have tons of different options in terms of different time frames we could use. You could use really any time frame you want. In this case, on our drop down, we have anything between 1 second all the way up to 1 year or 12 months. Now, depending on the time frame you have selected, it's going to impact the price action with the candlestick. So for example, if I have the daily chart selected, every single one of these candlesticks represents 1 day's worth of price action. So let's take this candlestick for example. That's February 26th. This candlestick represents 1 day's worth of price action. The next one is February 27th. This candlestick represents 1 day's worth of price action. This is February 28th, represents 1 day's worth of price action. You get the idea. And that is because we have the daily time frame selected. Now, if we go to the weekly time frame, in this case, every candlestick represents 1 week's worth of price action. So in this case, this candlestick, this entire candlestick represents 1 week. This candlestick represents 1 week or 7 days. So if we take, for example, the last 7 daily candles, so let's say we take this one, this one, this one, this one, this one, this one, and this one, that's 7 candlesticks, right? 7 daily candlesticks. These 7 daily candlesticks represent 1 weekly candlestick, right? Because there's 7 days in a week. Hopefully this is making sense. Now, if you go to the lower time frames, let's say the 5-minute chart, every candlestick on this chart represents 5 minutes worth of price action, okay? If we go to, let's say, the hourly chart, every single one of these candlesticks represents 1 hour's worth of price action. So if we take the last, let's say, 24 hourly candlesticks, right? There's 24 hours in one day. If we take the last 24 candlesticks on the hourly chart, that represents 1 daily candlestick, right? So you could see that these time frames, what they really show you is perspective. If we look at the daily time frame or the weekly time frame, right, that's going to show you, or the monthly time frame, that's going to show you a much broader perspective on what's going on with price action for that security we are looking at, right? Versus you're looking at the 1 minute, 2 minute, 5 minute charts. That's going to show you a completely different perspective. That's going to show you a perspective in like the micro level. So if you want to see the overall bigger picture on what that stock, crypto, Forex pair is doing, you're going to want to go to the larger time frames, the daily time frame, the weekly time frame, or the monthly time frame. If you want to see what is going on with price within the next 30 minutes to an hour, right, and you're going to be looking at it at a micro level, you're going to be looking at the smaller time frames, the 1 minute chart, 5 minute chart, 15 minute chart. So you can quickly realize that, you know, the time frames that you use, it's going to be really dependent on the style of trader that you are. For example, if you're someone who likes to buy, wait 5 months and then sell, you're like a core trader, well, you're going to be looking at the weekly time frames and the monthly time frames. If you're someone who's a scalper that's getting in and out of securities, stocks, cryptos, whatever, really, really quick, then you're going to be focusing on the smaller time frames because that's going to give you a different perspective, right? If you're getting in and out of a stock, why would you be looking at the weekly time frame? You should be looking at the 1 minute time frame, 2 minute time frame, or 5 minute time frame. Hopefully this is kind of making sense. And I have a really good analogy for this, and it's, let's say you have a mountain, right? And bear with me, this might be a little confusing, but this is all going to make sense by the end of the analogy. Let's say you have a mountain. When you're at the base of a mountain, you have no idea what your environment is, what the landscape is around you. You don't know where the lakes are, where the specific trees are at, where the rivers are, where there's habitat, where there's animals, right? You're kind of clueless because you're at the base level. You don't know what's actually happening around you. However, when you, let's say, move up a little bit, up on the mountain, you're going to have a much better perspective. You're going to be able to look down and see, hey, we have this tree over here, we have this river over there, this lake, this pond, right? Oh, there's animals in this part of the landscape, right? And as you move higher and higher up the mountain, you're going to have a much larger perspective, a much better perspective on what's going on beneath you. At the top of the mountain, you're going to be able to see absolutely everything. You're going to be able to see where all the lakes are, where all the caves are at, or whatever the case is. I'm literally making things up off the top of my head. But the point that I'm trying to make is, as you go up the mountain, you have a much more elevated perspective. You have a much clearer idea on what's going on at the bottom of the mountain, right? And it kind of works the same way with time frames. When you're looking at the larger time frames, you have a better overall perspective on what is going on with price. Versus you're on the 1 minute time frame, you're kind of blind. You don't know exactly what's going on with price. You only know what's going on with price on a micro level, but you can't see the larger picture like you could see on the daily time frame, weekly time frame, or monthly time frame. So you might be thinking to yourself, okay, cool, I'm starting to understand this, but which time frames do I actually use, or what time frame should I use? And the answer to that is, our goal as traders is to perform something that is called multiple time frame analysis. We shouldn't only be looking at one time frame. We should be looking at multiple time frames when we are trading, so we can have different perspectives on what's going on with price. And so, for example, instead of just looking at the daily chart, look at the 60-minute chart, look at the weekly chart, look at the 1 hour chart, or that is a 60-minute chart, or look at the 15-minute chart, right? look at different time frames. That's going to give you a different perspective. It's going to give you multiple perspectives. It's going to give you more confirmation on what is actually happening with price. And we are looking for something that is called time frame alignment. We want to see the time frames that we're looking at, we want them to be aligned. We want them to be giving us the same type of information. So I'll give you an example. Let's say the daily chart is bullish, meaning it's uptrending, right? Just as an example, uptrending. Now, let's say the hourly chart, right, is downtrending, just as an example, okay? Now let's say the 15-minute chart is also uptrending. And let's say the 5-minute chart is sideways. Okay, cool. So I'm looking at this, right? And I'd be looking at the time frames. I'm seeing that the daily is bullish, hourly is downtrending, 15-minute is uptrending, 5-minute is sideways. If I'm looking at this, the first thing that I'm going to notice is that we don't have alignment, right? Every time frame is essentially different. One time frame, the higher time frame, is uptrending. The next larger time frame is downtrending. Next we have the 15-minute chart, which is pointing up, 5 minutes sideways. I don't have alignment. I don't know what's actually happening with price, right? Versus the daily chart was uptrending. The hourly chart was uptrending. The 15-minute chart is maybe uptrending and consolidating for higher. The 5-minute chart is also in an uptrend. It's also looking higher. It's showing bullishness. In that case, I have alignment, and it's showing me, right, that price is all telling me the same thing across multiple time frames. That's what I'm looking for. I'm looking for that alignment. It's going to give me way more confirmation that the trade is actually going to go in my favor, versus if all the time frames are telling me different things, then I don't really know which time frame to trust. So in that case, I'm going to just ignore that trade, and I'm just not going to take it. Okay, so here it's pretty obvious, but we have the 4 time frames, daily time frame uptrending looking higher, hourly time frame, we have a consolidation after an established uptrend, which is inherently bullish, especially when we're consolidating at the highs. We're breaking out on the hourly time frame. On the smaller time frames, we got the 15-minute chart. We have what's called a buy setup. This is a retracement pattern. This is like buying the dip. However, we're buying the dip the correct way, the mechanically correct way, right? So we have an uptrend, retracement, and you're looking to get in on this retracement right here. 5-minute time frame, we have an uptrend, and we also have a consolidation towards the upside. So we have a breakout on the 5-minute time frame as well. This is obvious, right? In this case, I would never be looking to trade this short. I would only be looking for a long opportunity. You should be looking at this, and this should be pretty intuitive. Yeah, all the time frames are trending higher. All the time frames are essentially telling you the same thing. They all have bullish patterns. We should be looking to play long. This is the type of confirmation I am looking for. Now, however, let's say, for example, it's not perfect. And on the 5-minute time frame, you actually have, let's say, a little bit of a downtrend. So in this case, all of the time frames except the 5-minute time frame is uptrending. However, the 5-minute time frame is downtrending. What do you do in this situation? You don't have the alignment to commit to this trade, because remember, you're taking this trade off of the 15-minute chart, but the 5-minute chart is not aligned. What do you do? So you have a couple of options. Number one, you could say screw it. Maybe you like the setup so much and you like how you have, higher time frame alignment. You have the daily and hourly both aligned with the current time frame, which is the 15-minute, and you take the trade anyway, despite there being a downtrend on the 5-minute chart. That's one option. Maybe you really like the setup. Number two, what you could actually do is wait for this 5-minute time frame to break its downtrend before you enter. So let's say you're in the downtrend, it's downtrending. You could wait for it to break this downtrend and maybe set up as a higher low, and then from here, you could look to get into the trade. You could look to, you're gonna have more confirmation that this trade is actually going to go in your favor because you broke that 5-minute time frame. So what you do essentially is wait for the 5-minute to begin uptrending, to show bullishness. And from there, you do finally have that multiple time frame alignment. You're gonna be much more comfortable taking this trade. Another thing you can do, and this personally, I don't really do this all that often, but this is an option. Let's say the 5-minute is downtrending, but it looks really good on the 15, right? And it looks really good on the daily and hourly. What you could do is enter in with half of your size, right? Let's say you were gonna get 100 shares for this trade. You get in with 50 shares here while the 5-minute is still downtrending. And once the 5-minute breaks the downtrend, right, and maybe you get a little bit of a retracement on the 5 before it continues higher, you can add back or get in with full size. You get in with the next 50 shares or the next whatever amount of shares you would get for that trade, depending on what your risk is. So you get in into the trade with half size in the beginning and then full size once the 5-minute time frame shows bullishness, shows that it's going to be uptrending. Hopefully this is all making sense and you're understanding what we're looking for. We are looking for alignment across multiple time frames. And in terms of what we're looking for in that alignment, it's pretty easy. We're looking for trends. We're looking for an uptrend, sideways trend, downtrend, and we're trying to see, do we have that same trend on multiple time frames? If we're sideways on multiple time frames, that means there isn't any particular direction. We're just sideways. Avoid that trade, just pass on it. If we're uptrending on multiple time frames, the bias is likely that we're going higher and you should be looking for a setup to play long. If we're downtrending on multiple time frames, then you should have a short bias. The bias should be, price is moving lower, so you should be looking for short opportunities. And it's as simple as that. It's really not difficult stuff, but by just doing this, by looking at multiple time frames before you take a trade and seeing whether you have that alignment or not, that is the difference between you taking a winning trade or a losing trade. This is one of the biggest mistakes that beginner traders, and not just beginner traders, even expert traders make. Even experienced traders make this mistake and they lose money as a result, even though it's really quite simple. All you're doing is looking across multiple time frames and seeing what is happening with price. And if all the time frames are telling you the same thing, that should give you way more confidence that your trade, assuming you're trading in the direction of the trend, is actually going to work or not. So the next question is, what time frames do we actually use? And this is going to vary based on your style of trading and what you're trading in the first place. But typically, let's say you are taking a trade off of the 15-minute chart. You always want to look at least one time frame below the one you're going to take a trade off of, and at least one time frame above the one you're going to take a trade off of. So let's say you're looking at the 15-minute chart. You would at least look at the 5-minute chart, and you would at least look at the 60-minute chart, right? And let me go ahead and show you what time frames I actually use. And let's start off with day trading. Okay, so we're going to start off with day trading. And this is going to be applicable to the stock market. So right when the market opens, from 9:30 a.m. to Eastern, of course, this is Eastern time frames, 9:30 a.m. to, let's say, 11 a.m. Or actually, let's just do 9:30 to 10 a.m. first. In this case, 9:30 to 10 a.m., I'm going to be focusing on the 1-minute chart, the 2-minute chart, and a little bit of the 5-minute chart, but mostly the 1 and 2-minute charts, okay? From 10 a.m. to, let's call it 11:30 a.m., okay? You're going to be focusing mostly on the 2-minute chart and the 5-minute chart and a little bit of the 15-minute chart, okay? And next, let's call it from 11:30 really to the rest of the day, 4 p.m. Eastern. You're going to be looking at the 5-minute chart and the 15-minute chart, okay? Now, these are the time frames you should be using. So my main time frames for day trading is the 1 minute, 2 minute, 5 minute, 15-minute chart. Now, during all of this, right, doesn't matter what time of day you are day trading, you should always keep an eye on the higher time frames. So in this case, always keep an eye on the 1 hour chart and daily chart. Okay? So these are the time frames you're going to be using for day trading. However, you're always going to keep an eye on the larger time frames, and I recommend doing that for any type of trading you're doing. Always look at the higher time frames as well. So let's say it's 9:40 a.m. You found a trade off of the 2-minute chart. You should always, before taking that trade, understand what price is doing on the larger perspective. So you're going to look at the hourly chart or the daily chart, right? And if you have like no alignment, there's nothing interesting that's happening on the hourly or daily chart, you should probably pass on the trade that's occurring on the 2-minute chart. Okay, hopefully that makes sense. And another example is, let's say it's 11 a.m. You found a trade off of the 5-minute chart, right? Found a trade off the 5-minute chart. You always want to look at one time frame below. So take a look at the 2-minute, and then also take a look at the 15-minute chart, okay, and see if you have that alignment, okay? And while you're doing that as well, you should simultaneously keep an eye on the hourly or daily chart. To be honest, whenever I'm taking a day trade, the first chart I actually look at is the hourly or the daily chart to see what's even going on in the first place. What's the overall perspective? What's the overall, what's the bigger picture that's going on with the price action? And then I'll look at the smaller time frames to see if there's a potential opportunity for me to get in, okay? Hopefully that makes sense. This is for day trading stocks. Honestly, I think in terms of day trading, the best thing to day trade is stocks or options. So for options, this is also going to apply the same way. I don't recommend day trading crypto or Forex. I would only really recommend day trading stocks. So this is what I do for stocks. In terms of like swing trading, okay, so let's do swing trading next. Alrighty, swing trading. Okay, you're gonna be really looking at the larger time frames. So the 1 hour chart, so 1 hour, you're gonna look at the 1 hour, you're gonna look at the 4 hour as well. You're gonna look at the 1 day, so 1 day, and you're gonna look at the 1 week chart, okay? These are the main time frames that you're gonna be looking at when you're swing trading, and whether or not you're swing trading stocks, crypto, or Forex, okay? So a lot of times what's going to happen is you're going to find a potential swing trade off of the 4 hour or daily time frame, right? And then you could actually look for your entry, look for a way to get into that swing trade off of the hourly time frame. So you sort of like establish your bias on the trade on the 4 hour or daily chart, and you go to the 1 hour chart for your entry, okay? If you found a swing trade, let's say on the weekly chart, and you have that weekly bias, then you could look at the 1 day or the 4 hour chart for your entry, okay? Hopefully that makes sense. And yeah, make sure you have that alignment across all of these time frames as well. But it's pretty straightforward in terms of what time frames to look at when it comes to day trading or swing trading. Now, you know, these are not the only time frames that exist. If you have specific time frames that you like looking at, I'm not telling you to stop looking at them. Use the time frames that you like to use, but always look for alignment and always look at least one time frame below the time frame you're looking at for a trade and one time frame above the time frame that you're looking at for that trade, and always keep an eye on the larger time frame so you understand what the bigger picture is telling you, what the bigger overall perspective is telling you. And there's also core trading. We could talk about that too. That's like holding positions for several months. For that, it's pretty straightforward. You're going to be looking at the one day chart, the weekly chart, so 1 week, and then one month chart. So for core trading, you're going to be looking at the weekly, monthly, and daily chart. So for example, you found a monthly bias, you could double check what's going on in the weekly and then look at the daily chart for your entry. Or you found a trade off the weekly chart. That's more of a swing trade though, if you're looking at the weekly. but you found a trade off the weekly, you go to the daily chart for your entry, okay? Or maybe you will be entering off of the weekly chart if you found a setup on the monthly, whatever the case is. The point that I'm trying to make is you can get creative even. It doesn't have to be systematic. Like, you could be creative and look at different time frames and find different entries and find different options for when to get in, where to place your stop loss, how to manage the position. And depending on the style of trader you are, the way you're going to be doing this analysis could be different. It's not fixed, right? There isn't one way to do it. You're going to be looking at different time frames to find different entry, stop loss, target opportunities, right? So hopefully this is all making sense. Hopefully you understand what time frames you should be looking at. And again, you're always looking for alignment. You're always looking for what the overall perspective is, and you want the time frames to agree with each other, and always look at multiple time frames. That's basically it for the video. Hopefully this made a lot of sense, and let me know in the comments if you have any other questions about time frames. I am glad to help you out. I guess one more thing, if you're doing scalp trading, if you're getting in and out, scalp trading, right? Obviously you're getting in and out within seconds or minutes. The higher time frames don't carry that much importance. So if you're scalp trading, going for really, really quick moves, then you'll be looking at the 1 minute chart, the 2 minute chart, 5 minute, and 15 minute, okay? I would still recommend looking at the higher time frames even when you're scalping, but it's gonna carry way less significance. If you're getting in and out within seconds or within minutes, you're primarily gonna be looking at the 1, 2, 5, and 15 minute charts, and look at, obviously, several of these charts. Practice that multiple time frame alignment. And that's it, guys. Hopefully you found this video helpful. Make sure you subscribe and make sure you like this video up. A lot more content coming your way. Let's get it.